Well, let's focus on the next management though. Aether Energy, that's the one that listed and had a pretty good listing. The stock actually had opened up in the green. However, from the top, we have seen some profit taking. Markets aside, let's understand business. We have with us Tarun Mehta, Executive Director and CEO of Aether Energy, who joins us on the show. Hi, Tarun. Good morning. Good to see you. Well, it's been quite a journey for you. So congratulations on getting listed on the Indian bourses. And we welcome you to the stock exchanges.
Thank you.
We look forward to interacting with you, as this journey progresses. That said, post raising some money from the market, well, your balance sheet is looking in much better shape. And now a lot of focus will be on the operational efficiency. So give us a couple of numbers. What kind of a volume growth can you guide for this year? And what kind of a market share are you looking at? The last time around, I recall you were telling us that it had perked up to the mid-teens. But what is the range we should work with for the year? Go ahead.
So last year was FY25 was a pretty important year for us. We finally launched our more mass premium product Rista, and that's really starting to turn things around. Historically, Aether used to be very strong in South, where we continue to maintain our leadership position as recently as last quarter. But the rest of the country is where we hadn't pushed aggressively enough in the past. With the new product, we found a lot of success. You will see market shares have trended up really, really well in the states of Gujarat, Maharashtra. Gujarat particularly is a great success story at touching and crossing 20% market share multiple times. I think this product is finally starting to take us mainstream, especially in the non-South markets, which is also where a lot of our expansion is going to come from. But even before that expansion really kicks in, you will notice in FY25, three-quarter data that's already out there, we've already grown 45% in volume. And remember, this growth has come only on the back of most of this growth has come back on the back of new product. The distribution expansion that this product unlocks is still a journey ahead of us. So we are extremely bullish about the near-term growth because of distribution, because of how Rista, our new family scooter, is landing in the market, and generally how well the India premiumization story is really, really taking off, where Aether really plays in the center of it.
Indeed, Tarun. Tarun, we are, we have a little bit of a timeline, but, we have understood that business, and you have made a couple of these points as well pre-listing. If you could tell us, because of this new product launch being accepted so well, and because of the higher market share that you have in Gujarat as well, what is the volume growth you can guide us for this year? And what should be the targeted market share? In Gujarat, you've done much better. From early teens, you've gone to mid-teens. Where do you see this number stabilizing at? Two numbers, growth and market share.
Overall, I think both margins and volume and market share, all three should trend really well this year. I am personally definitely expecting an even better trajectory than what we saw in FY25. Gujarat was, in my opinion, just the starting experiment. I think there are states of Maharashtra, Madhya Pradesh, Orissa. I would say all these states have responded really well, and we are very, very, very excited about them. Obviously, I can't give you a specific guidance yet, but wait for results and wait for more commentary. But these are the places where I'm very excited, and only one of those states is where I'm still talking about the actual numbers. As all these states really start to fruition out, very bullish.
So last year, in the first 9 months of this financial year, volume growth was 45%. You believe you can better it over FY26 because of the product that you have as well. And a large part of that, while it comes from your new product, also comes from distribution expansion. If you could give us some sense on how many distribution centers are you likely to open over the next 12 to 18 months? You, as of filing, had around 265 experience centers. So then by that measure, we'll get a sense on how your volumes are likely to pan out as well.
Now, stores have been expanding very, very, very rapidly in the last few months, particularly, and you will keep hearing about this in our commentary going forward. Let me just give you some context. 260 odd stores by December. Most of our industry peers are at between 700-800. We even hear 1,000 plus stores already live. There are hundreds of cities across the country where Aether has not even opened its first store. And honestly, we held ourselves back in opening stores in these cities in the past because we had a very premium product which would not have been the right fit in these markets. But with Rista, I think all those cities are fair game for us. So honestly, we think it's that the timeline is right for us to now take our distribution at the same level as our peers. And because we have a capex-light distribution model, because it's via partners and dealers, we are very confident of being able to scale up our distribution really, really rapidly in the coming few months. So, but that's a headroom for growth here. We are at about 260. Our peers are at about 800, maybe 1,000. And I believe those numbers are probably the right long-term numbers, maybe even short-term numbers for us to focus on.
So how long before you get to the industry level of 700, 800 dealerships? And because you can scale up a lot faster, does that happen in FY26? Does that happen in FY27?
No specific guidance. No specific guidance.
Right. We tried a lot.
No, Tarun, but you have to give us this number at least. What about on your cash flows? The cash flows are still negative. And last time we spoke, you told us it's headed in the direction that you turn into a positive number. This regulator has got you on board. They are happy with the performance you have listed. No one's toying with the law. You can tell us now. When do you expect to turn cash flow positive? Will it be FY26 or is it FY27 or is it later?
I will still skip specific guidance like this. What I can talk about, however, is that in our case, because we are comparatively not as capex heavy as some of our peers, we believe the journey from EBITDA break-even to PAT and cash break-even is going to be a pretty small one in our case. Like literally the largest capex that we've called out is for the next large mega capacity at Aurangabad. But outside of that, stores are not ours. We are not into cell manufacturing. So our overall capex is relatively light. So I believe our EBITDA break-even timelines and our cash break-even timelines are going to be very, very close to each other.
Okay, if you could give us a sense of...
Obviously, I'm very positive, very excited.
Right. If you could give us a sense of at what capacity utilization or at what volume run rate do you break even?
Actually, capacity utilization is a very old way to look at this, and that actually has a limited impact in overall profitability. We've seen our capacity utilization go from 25 to almost 40, and I think just this last festive, it was touching 60%. Capacity utilization has gone up well, but the bigger impact on profitability is really coming on back of volume, which is why I'm again and again keeping us focused on how volumes are trending up, because fundamentally the unit economics that we have cracked, and remember, our unit economics is a very clean one. We don't run our own stores. We have very limited dependence on subsidies. It's only one central government subsidy of 5,000 rupees. So the margin is quite fundamental and quite dependable. That's trended really well. So margins are at a good place. It's all eyes on volume now. As the volume grows, and hopefully on the FY25 trajectory or better, I'm very bullish on profitability in the short term.
One question that everyone's been asking is you're functioning at a lower capacity utilization level, yet you're going ahead in your increasing capacity. One would argue that it could give negative operating leverage. But you're saying you're seeing the path where demand is going to be strong and your volumes are going to rocket. When do you hit 1 million units of capacity? You're going to be at around 1.45, I think, post this capacity addition. 1 million, the target by when?
Yeah. So our current capacity is 35,000 units a month. Just see our trajectory on this case. October 23, we were 10,000 units in the festive month. October 24, next festive, we've scaled up to 21,000 units on a total capacity of 35. At this rate, honestly, I'm actually worried about this coming festive in October 25. I think business is scaling up really well. Customers have responded really well. So I'm very bullish on capacity utilization. Our next increment of capacity is another 42,000 units a month, which is what's coming up in Aurangabad. And then there is another phase 2, which is an incremental 42. So that's how you add up to 1.45. But phase 1, Aurangabad, over the next year or two, will scale up to roughly about 1 million. And obviously, I'm bullish about getting to sort of moving on the trajectory really on the same timeline.
All right, we take that point, Tarun. Thank you so much. We tried our best to get in some guidance and, numbers and specific timelines, but you were good enough in skirting all of those. But mind you, once you report your results, we're not going to leave you. We're again going to push you for all these numbers, operational profitability, market share targets.
I've mentally signed up to do this every quarter.
Perfect.
Do this dance.
That's your responsibility as the owner of a company towards shareholders.
Tarun, for today, you go ahead and you celebrate this feat. It's a big day for you as well as the team. So celebrate it. We look forward to chatting up with you soon, and hopefully we'll get a couple of more numbers out of you. But for the day, celebrate it. Well.